All right, joining me is Stephen McClurg, founder and CEO of Canary Capital, who's a digital asset investment firm that just today, they launched the first 1933 Act spot XRP ETF. That's the Canary XRP ETF, ticker symbol XRPC. They also offer a spot Litecoin ETF and a spot HBAR ETF. Both of those were first to market as well. Those launched at the end of October. But Stephen, it is always great to connect. I appreciate you taking the time.
Thanks so much for having me, Nate. I always appreciate coming on your show.
Okay, so I have to start by asking you what is on the agenda today, given that you did just launch the first 33X spot XRP ETF. So are you doing a bunch of media? Are you popping some champagne? What does the day look like for you?
We are rolling up our sleeves and getting after it. So I'm an old trader. I used to trade fixed income back in the day and was a bond manager and then traded crypto. And now that we've got two other ETFs that we launched in the last month and a new one today, I'm stepping in and helping our traders, just get all the orders processed. We're not only seeing a lot of activity in XRP, which is to be expected, but we're also getting a lot of volume in creates and Litecoin and HBAR too. So it's quite a day today.
We'll talk more about the trading activity thus far in XRPC. Obviously, it's very early. We're recording this not long after the market opened, but what does the initial trading look like so far?
Yeah, so far in the first 15 minutes, we've seen about 20 million in volume, and we expect a lot more. One of the things that won't show up in volume is in kind, and we can talk a little bit more about that if you want. But now that in kind has opened up for crypto ETFs, you won't see that in volume, but you'll see it in end of day AUM.
So I think one of the keys to XRPC is that you are first to market here, as I mentioned. And I want to take a quick step back because I know you're well aware that there are a number of spot XRP ETF filings with the SEC from other issuers. So can you explain how it was that you were able to come to market first? Like, how did this all unfold over the past several weeks and months, including while we were in a government shutdown?
Yeah, so what we did was, we worked through a lot of the initial comments with the staff at the SEC over the last year. So our first filings were related to Litecoin, HBAR, XRP, and Solana. And we actually had gotten furthest along on Litecoin and HBAR. And I would say kind of in order of how far we are and where we felt comfort. Those two were probably the first because they were actually looked at and reviewed under Gensler's SEC. And if you remember the Gensler speech when he said that Bitcoin, Ethereum, and Litecoin are not securities, and I was shocked that no other issuers filed for Litecoin at the time. So we did. We filed a year ago, and if anything, the waiting for generic listing standards actually slowed that one down. And then, of course, HBAR, the way that they filed was clearly a commodity and not a security as well. So those were both in process under the old SEC and then finished up under the new SEC. So they were pretty far along. But when the government shut down, the SEC did put out guidance on how to access capital markets, how to do things during a government shutdown. And one of them was to file with a no delaying amendment, which essentially an 8A filing. So we first attempted that with Litecoin and HBAR and waited our 20-day period and got those launched. And then we went forward with XRP and then Solana. So for XRP, we felt like we were pretty far along in comments and we're relatively finished. And of course, as you can see from firms like Franklin and Bitwise, they felt the same way. All of our lawyers had comfort. So they did something similar. So you should see those coming in the coming weeks.
Yeah, and so to that point, I just want to clarify because I saw some chatter that maybe the SEC had not spent as much time on the XRP filings prior to the shutdown, and there wasn't as much back and forth with issuers as there was on some of the other crypto assets. It sounds like that wasn't a concern for you at all because clearly you launched, but can you offer any insight into that?
Yeah, I mean, I can offer a little bit of insight. We felt like XRP was pretty much done as well. Uh, Probably the reason why there wasn't as much, and you can see this in all the amendments and filings, but there weren't as many rounds on XRP as there were for Solana, and that's purely because of staking. So everybody attempted to put staking in the first filing, and a lot of the efforts were spent really digging into the staking component of Solana. So that's one of the reasons why there's a little bit more back and forth there. But outside of that, there really wasn't a material difference.
Why do you think other issuers weren't as savvy, shall we say, in removing that delaying amendment? Because again, in the crypto ETF space, first to market is critical. That's a huge advantage. So is that a reflection of having a really good legal team? Is that your own ETF experience? Where did that come from?
Well, look, I mean, you kind of it goes back to you're right. I mean, I've been doing I've been managing and launching ETFs for a little over 15 years now, and mostly on the esoteric side of things, and coming from a more of a security structuring background. Our team tends to be a little bit more not only nimble but also a little bit more thoughtful when it comes to how we're going to do these things. I mean, I've got a man on my team that's been doing ETFs for 35 years, I think. He was former head of product at Ridex, if you remember that shop, and then Guggenheim, where we worked together, and then at Valkyrie. So we've been working together for a very long time. So we just have people on our team that know the ETF business, and in and out. So we see these things and we act very quickly. And of course, we have a great legal team as well. But then it also goes to show that sometimes being a smaller issuer, you can get through things, right? So if you're like a BlackRock, for instance, you've got walls and walls of legal people that want to say no, as opposed to a more commercial team that's looking for answers to say yes.
Ridex and Guggenheim, that is absolutely a stroll down ETF memory lane. So clearly, you're showing your experience in the space. Um, Look, the SEC's generic listing standards that you were alluding to earlier, those were obviously critical to all three of these spot crypto ETFs that you've brought to market. Just at a high level, because I want to make sure everybody understands the basics here. Can you explain what those are?
Yeah, so if you remember going back to the Bitcoin ETFs, in order to launch a 33 Act ETF, you have to apply for a rule change in addition to filing a prospectus or an S1, or in some cases an S3. And that rule change is the 19b4. So I think the entire crypto community learned a lot about 19b4s and rule changes during the whole spot Bitcoin drama, and then again during the Ethereum ETF drama as well. And so what the SEC sought out to do was get feedback from several exchanges and issuers, and we were part of a lot of these conversations in order to create these generic listing standards. And it doesn't just apply to cryptocurrencies; it applies to broad commodities. That way, an ETF issuer that might say have a gold ETF, they can look and say, okay, well, there's certain rules, and if I follow those rules, then I don't have to specifically get I don't have to get a rule change, and the exchange will actually just verify the fact that they believe that this falls under that generic listing standard. The main component as it relates to cryptocurrencies under the generic listing standards is having a futures market. So broadly at the moment, if there is a futures market that's been around for 6 months in the US on an ISG exchange, which there are three that qualify under that, then it qualifies under the generic listing standard. For instance, Litecoin, HBAR, XRP, Solana, they all have futures that trade in the U.S. on several platforms, actually. So having that generic listing standards in place eliminates the headache and the cost and the hurdles you have to jump through in filing 19b4s and getting that rule change approved. There are some cryptocurrencies that are on file at the moment that don't fall under the generic listing standards, so a 19b4 would still be necessary. But I do expect in the future that the SEC might make some adjustments to that generic listing standard so that there's more of a quantitative approach instead of just the fact that there's futures that exist.
Is there anything in particular that you would point to that you would like to see changed with the generic listing standards, or is that it, just using more quantitative metrics?
Yeah, look, I think quantitative metrics should probably include something like is what's the market cap, what's the trading volume on U.S. based crypto exchanges. I think those are very important. I don't necessarily believe that the only valid measure is having a futures market, but volume of the actual token in the U.S. is extremely important.
Okay, so going back to the XRP ETF, I'm curious, how do you like to describe the investment case for XRP, and what type of demand do you think we'll end up seeing out of these products?
Yeah, look, I think it's a very different offering than Bitcoin or Ethereum, which is two that a lot of people already know. What XRP Ledger is actually a platform that allows financial rails to transact on top of, right? So one of the reasons why it was created to begin with was to help with remittances and moving money back and forth between countries, almost like a Western Union or a Fed wire type function. So it's going to be really interesting to see how transformative this is, and the way that I think about it is, and this is one of the reasons why I got into crypto a little over 10 years ago, was if you think about remittance payments and people that come from other countries that go to not just the U.S. but all around the world to work and then send money back home to feed their family and to cover costs, they're paying very large fees whether it's wires or Western Union payments. Not everybody has access to banks, so those fees can be anywhere between 8 and 15%. So that's a big tax on workers globally. So creating rails like what XRP Ledger has done actually allows quick transactions on their network. And I think it's going to be a real boom to the global economy.
Let me ask you this. I know that you're out on Twitter or X like I am, probably way too much. But I know that you've seen how XRP does tend to generate a lot of debate, right? There's a very passionate XRP army, very passionate, but there are also a lot of naysayers, people who believe XRP is too centralized, that Ripple still has control of a large amount of the supply. I think some others will point to the usage of the XRP ledger or lack thereof, that it hasn't necessarily been widely adopted for use in DeFi. I've seen some other people say, going back to what you were talking about on just global remittances, that why do we even need XRP if we have stable coins? And so we don't have to get into all of those, but any thoughts on some of the critiques out there?
Yeah, absolutely. And the first thing I'm going to say is that centralization isn't all that bad. So let's take Bitcoin, for instance. I'm a big holder of Bitcoin. I love Bitcoin. It's very decentralized. It's a way for no one to be able to control your money. I can transact with you, with anybody else. I can do it fairly quickly within 30 minutes. And it's extremely secure. But let's say that I forget my private keys. That money's gone forever. So there's a lot of benefits to decentralization, but then there's also some things that that people, there's some risk. So when it comes to let's say that you're a person, just like what I was describing before, working in another country, sending money back to their family. We're not talking about millions of dollars or even hundreds of thousands of dollars. We're talking about hundreds of dollars, thousands of dollars that people need secure, that they want to send back. And if they lose their private keys, then it can be devastating. So what we found in the world of blockchain and cryptocurrencies is there is a need for highly decentralized platforms. There's also a need for more centralized platforms that act a little bit more like traditional banks, where you can actually call someone and get your password reset. So centralization isn't that bad of a thing. And I think that there's a need for a spectrum of decentralized versus centralized control over a network and everything in between. And depending on what you're doing with that blockchain is how that's really going to play out. Now, as far as stablecoins, and I agree with you, the stablecoin boom has been absolutely fantastic. Ripple actually launched its own stablecoin, RUSD, that does transact on the XRP ledger, and also has a partnership with Gemini. So that is one stablecoin that's growing a whole lot. And if you think about where stablecoins are, they're across many different platforms. Tether was originally built on the Bitcoin network, but primarily transacts on Tron and Ethereum. And then many other ones transact across multiple platforms. But if you're transacting a stablecoin on, say, Ethereum, your gas fees can be pretty high, and then it also can get bottlenecked, which we've seen a lot in the past, as opposed to RUSD on the XRP ledger is actually quite fast and quite cheap.
What about from a pure price perspective? Like, how do you think about the longer term upside for XRP? And if you don't mind, I want to do a little bit of math for you here. I was looking before our conversation. So right now, the price of XRP is around $2.50, and its market cap is about 150 billion. And then if you look at Bitcoin, its market cap is around $2 trillion. And so let's just say hypothetically that XRP soars to equal Bitcoin's current market cap. That would put XRP at like $35 a token, given the existing circulating supply, which is like 60 billion, if my math is correct here. And clearly that'd be fantastic, right? If we go from 250 to $35. But I see predictions out there, I'm sure you see them as well, of XRP going to say $1,000 or even 10,000. And so I'm just curious, from a pure price perspective, how do you think investors should think about that?
Well, look, of course, anything's possible, but that's a very high number. So especially $35, I think that's even a very high number. But given its current ecosystem, the current platform, the current price, I don't think $10 for XRP is unrealistic at all. That's probably something that's achievable in the next 3 to 4 years.
Okay. And going back to Litecoin and HBAR, in the ETFs that you have around those, how do you like to describe the investment case for each of those tokens?
Yeah, yeah. So Litecoin has been something that I've followed for a dozen years. It's been around since 2011. But I really view Litecoin as the silver to Bitcoin's gold. I always have. There's also some really interesting features that Litecoin just implemented with Charlie Lee, and that was implementing Mimblewimble, which allows you to have a privacy component, if you so choose, in your wallet. And I think privacy is going to be a very important issue when it comes to tokens. I don't know if you've seen the run up in Zcash and Monero in the last 2 months, but it's really taken off globally. And just because here in the U.S., I mean, look, people say they want privacy. At the end of the day, most people really don't. But globally, it's extremely important to have privacy features in money, because there's a lot of countries that exist under dictatorships or monarchs that aren't necessarily fair to its citizens, and people have to hide their money from those governments. And by the way, I do like the option of having a privacy feature. I'm a libertarian. I'm in the camp that money should be private, and nobody has the right to know how much you have. So yeah, I'm a really big fan of the privacy component that Litecoin has recently put in. It puts us up in the ranks of Monero and Zcash as far as privacy goes. As far as HBAR goes, it's a lot like XRP, except it's really in a different area that it focuses, and it's really on the enterprise data side of things. So, for instance, I'm in Nashville, and they just built a giant headquarters for Oracle here. So I know a lot of people that work at Oracle, and they're all big HBAR fans because they understand the need for a network that holds data and that can be retrieved very quickly for enterprise use. So you'll find a lot of people that are in that enterprise software field that are big followers of HBAR. It's not as popular within crypto communities, but it is followed very heavily by developers in other places. it's probably one of the reasons why we had such good response in HBAR in the first few days. We saw 70 million in inflows in the first 3 days for HBAR, which is, puts it in a top 10 of all ETF launches this year, if not better than that. And we continue to see it even more so now.
And with all three of these spot ETFs that you've brought to market, all offer in-kind creations and redemptions, correct?
They do.
And talk more about that and just the structure of these products overall, just at a high level.
Yeah, so it's great that we can process in kind now. When Bitcoin Spot first launched, the SEC stopped in kind from happening, and in kind creates and redeems is really where the tax benefits come in. So what's the reason why it's really important in crypto is that there's a lot of people that actually hold tokens on their ledger or some other place that they necessarily don't want all of their tokens there, right? So think about Mt. Gox when it went down, or think about ledgers that have broken in the past. People want to probably diversify their holdings, and hold it in an ETF is probably one of the safest ways to do that, as opposed to exchanges or ledgers. And what we've seen as far as inflows coming in, about 85% of our inflows in HBAR has actually been in kind. And we're also seeing a large amount of orders this morning for in-kind and XRP as well. One of the things that when in-kind orders come in, you don't see it in trade volume. So trade volume is a little bit tricky. It doesn't necessarily translate one-to-one on AUM or inflows. It's just what's being transacted throughout the day. But when you have people moving their coins from a wallet or a ledger into an ETF, that trade volume doesn't occur because it is in kind.
How are those in-kind orders facilitated? In other words, what's the profile of somebody who can do this? Because I always think about, market makers and working with authorized participants, right, and interfacing with a fund. So some people may hear that and go, okay, I have $10,000 in HBAR. How do I in-kind that to get shares of the ETF? Can you talk a little bit about that?
Yeah, absolutely. So usually when you see in-kind creates, it comes from one of two sources. One of them is directly from the lead market maker or the APs. When they're experiencing a lot of volume and the inflows or the buys are bigger than the ask, then they might actually create shares to offset that, right? And then if it's the opposite, if there's more ask than or sells than buys, then they will redeem shares. So that's something that the market makers and the APs do all day. Now, if you actually have orders that you want to create and you want to move your coin in kind, you typically have to be an institution or a very large family office in order to have that facilitated for you. And they typically reach out directly to either a broker dealer, which might also double as a AP as well.
Okay, so we don't want a bunch of smaller investors calling you to try to figure out how to get shares.
It cannot happen. I mean, we're talking millions of dollars in coin when that happens.
Stephen, I know you have a busy day, so I'll wrap up our conversation with this. You have filings for a number of other 33 Act spot crypto ETFs out there as well. So I may be mistaken, but I believe Solana, Sui, Injective, Pengu, Tron. I feel like I saw one yesterday for a MOG ETF. And I know there's only so much you can talk about with live filings, but how are you thinking about Canary's crypto ETF strategy overall moving forward?
Yeah, absolutely. So a lot of the other filings we have are staked. The first three that we've launched were not staked. And that's really where we were waiting for further guidance from either the SEC or the IRS. We actually did get that guidance this week from Besant in a very clear guidance on how staking works in a 33 Act ETF. And now that we have that guidance, we are pretty comfortable moving forward with attempting to launch some of our future staked ETFs, which that's most of the field there. And then of course some of the ones that are NFT related, that's a little bit more work to do, of going back and forth and really nailing down how an NFT is going to fall into an ETF. It's not going to be too much different than art, but we're very excited about that prospect and getting that one structured.
Yeah, I believe the Pengu filing, that was the first one that would include NFTs, if I'm not mistaken. But Stephen, I always enjoy connecting. Again, congratulations on the launch of XRPC. Best of luck on that and on all of the Canary crypto ETFs moving forward. Thank you for joining me.
Hey, thanks, Nate.
That was Stephen McClurg, founder and CEO of Canary Capital. Hope you enjoyed this episode of Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting CryptoPrimePodcast.com. See you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.